All right, guys, let's go ahead and break into this Tuesday's recap here and take a look at some of this price action and go ahead and point out why we trade with key levels and that's about it, right? Find balance in your key levels. So we had the 24-hour period right through here. We used the fixed range volume profile to figure out all the levels. You kind of have your high, your low here. This is kind of your daily breakout, really looking at the last 24 hours. One thing I will point out real quick is going out to the bigger time frame here on the daily. You're looking at, here is the daily candle from yesterday, and then here's today's daily candle. So when people have asked, like, okay, well, you're using the daily, your last 24 hours. Well, we're using it between the time frames of the 7 o'clock time frame. So yeah, this is a part of this daily and part of this daily. But when you're down in the lower time frames here, you're not actually using the full daily candle. So when I say 24 hours, I'm talking about a 24-hour period. So it's off of that, the last 24 hours is kind of like by the day, but the day really is 7 o'clock in the morning until 7 o'clock the next morning is that 24 hours. So what we're doing is we mark the low and the high here, which you can kind of see in the yellow. In this case today, those are part of the breakout as well. So we're in this range, and we are asking the market to even either take out the high range or the low range, or it could just stay inside here. But anyways, we laid that out. We got the 30-minute candle on here. We got our breakout areas, and then the bigger support and resistance for the daily. So here in the morning, you can see we had this nice run up, which was great. Obviously, technically, if you're looking at this, this is your 30-minute candle that you're getting right here, and then just broke out instantly. Didn't really give you any reason to be able to get into this. The nice thing is you're above the 200 and the 21, so that's bullish. You're up here, you got the two closes. But obviously, when you go down into the lower 5-minute candle, there's not a lot of, you're already up into this area, which is everything's extended, telling you to kind of watch out, right? Because you went down to the 5-minute to get an entry. So you'd want to see at least the stochages going up or down. Now, if you go back into later in the day, let's go back to the 5-minute. It started to come down. On one candle, it took away all that morning. So there's pretty much 1, 2, 3, 4, 5, 6. It's an hour and a half, and then took it all out in one candle. The next candle actually traded a little lower, and then it acted like it wanted to recover. So you got to close 1, 2. You're going to start to look at this candle right here to enter. So that would have been, let's go back into the 5-minute. The 5-minute, though, is underneath its 21, and it's above its 200. That's 50-50. So basically, this is what we'd be looking at here. That's a no trade area to enter. So I need to get back above my 21, which did happen right here. So if we go back into the 15-minute, we did get back above. You had the 1, 2. Now you're all the way up to here again. So let's go back into the 5. Now the 5 is above this area, and everything looks good for us to enter or think about entering. So we would be thinking, okay, let's get into right here, and let's just trade up. Now the reason why, like I said before, be careful because your switches are already topped out. Are we going to get a breakdown? And if we're going to get the breakdown, that's fine. What I want to see is it come down here, start to rotate, and let us get in. So, and that happened to go underneath the 21 again on the 5-minute. So then it came back to what I threw out here. So this is the reason I'm pointing this out, because it keeps you away from the market. So really at that point you're saying, well, I'm going to go back out to my 15, which is smart. And what I want to see is it get underneath my 21 and my 200 if I'm going to go bearish, or are we going to start to recover here and set up again with what I've been pointing out, the 2 candles, and let's get in, like I marked right here, and we marked right here. So, and I marked this out the 5 because we'd already got in right here. This was the candle saying we could possibly get in, so we would have entered on the 5, but the 5-minute was saying we couldn't because we're underneath the 21. And then this was saying we're underneath the 21 again, so now we're waiting for this to break back up this breakout area, get back above this 21 and run, or it's going to break down, which you can see that we did get the breakdown, and then we got the 2 candle close. We didn't really get the true closes because you had to close and then it opened, went up, closed, and then came back through. So this would have been a lot harder to jump into right here because of this. So really you got the close, broke through with a lot of strength, so that's a good sign. Really, then you got the close here and the close, and then you're down here really on the 15. So you could be, you could watch this because you broke down and everything's bearish and had a nice strong move, so you could watch to get in here. That's up to you. So you could have gotten anywhere in this area as you broke down. The one thing is from here you want to see, roll over kind of like we can see in here, or back up to the top like you're waiting for it to get back up here. This could easily climb up and start to roll over and lose the pattern and keep going down. We'll have to watch to see. what I'm going to look at here is here's my weekly down here at a 110,000, basically 111,000. So we could come back down in this area and test the weekly point of control. We'll have to watch. You know, we're sitting here on the 5 minute. It really wasn't the best trade. If you did decide to take it a little more aggressive because you got underneath this area, you could have got in somewhere right in here. And then of course, so yeah, that's kind of what we're looking at here. Let me fix this here. Yeah, so sorry about this. Yeah, so that's what we're looking at right here. Is just kind of this run back up. So this would be where you'd want to look at exiting and get back into this price action maybe later. The one thing is you are 2 something in the afternoon. This is about 2:45 when this started to really run. Typically, a lot of times you want to get in, you know, up in this range, actually right back here in the 5 minutes. Usually somewhere right in here, you'll get the run. You can see that it tried and then rolled over on us. Now, some have said, hey, well, you could get into here up in this range. For me, I want confirmation. That's why I'm showing you this. This is a lot stronger trading. And then also, you would have only taken the 1 trade a day for yourself. Now, it depends on where you put your stop. You could have got a little bit better. But for the safe stop would have been up above the 200 or above this 30-minute candle from earlier. That's your kind of your resistance areas. It's broke down. Now you can go ahead and exit this trade and call it good because you broke back above your 21. So that's about it, guys. And this is kind of the system. That's why I keep pointing this out. And you can trade this pretty easily with the 21 and the 200. Obviously, you're always between them. It's 50-50. You could go bullish or bearish. If you're on top of both of them, you're bullish. If you're underneath both of them, you're bearish. And you can look at that on all different time frames. Doesn't necessarily you're going to use to trade them, but if like this morning we were more bullish when it first opened up, it was holding these areas. But you can see everything was tight and having a hard time moving sideways. And we're also talking about here, you know, there's different things to look at, right? But right now on the 1 hour, you are 50-50 if you're going to look at the bigger time frame. So I wouldn't be taking a trade till it broke down below this one right here, or broke out. Now this is trading on a larger time frame. But it also helps you get clarity on the market. So we had ran up and we were bullish, and now we're below the 200 again on the 4 hour. And so we were staying bearish. I guess we were bullish, but as the day went on, we actually started to go bearish. We lost the 200, then we were losing the 21, and now we're going on down. And we're starting to look at testing these lower areas again. So anyway, guys, that's just kind of looking at the market, but using your 21 and 200. It's kind of helps set the area of the market. Now, a lot of times we're just talking about the 15 and 5 minute. That's really all you have to look at anyways. Keep yourself easy, keep things easy, and take advantage of the market where possible. But that is about it, guys. Go ahead and like and subscribe, and we'll see you guys in the next recap. Talk to you soon. Thanks.